All right. So the way I take my trades, I find it to be simple. I think it's because I've been in the market enough times and I've watched enough people share all their different ways that they do it, and I've figured out a way for it to work for me as well. You're gonna figure out a way that works for you, but I think having a good simple basis is a great place to start from. Let's see. Nope. 9:30. Okay. So every time I enter into the market, meaning every time I sit down at 8 a.m., because I'm in Central Time, so sitting down at 8 a.m., I prepare for the market to open at 8:30. Where is 9:30? Okay. And I draw my line. I only draw for the day that I'm doing, but I'm drawing this because I'm going to show several examples. I put my line at 9:30 every time. And then I draw a line for 1800, which is the start of my Asian market, onto the 3 o'clock a.m., which is start of London market. I'm going to do the same here. Asian market, London market, Asian market, London market. All right. The lines can be kind of confusing, but know that this is New York, London, Asian, New York, London, Asian, and on. So let me start here. So what time is this? This is 9:30. Oh, let me start back here. Marking the charts is super important. If you have to start an hour beforehand, that works, because you're the one entering into the trade. So it's important that you understand why. And if it means you need to take more time in understanding your why or creating your thesis as to why you're entering into the trade, it's worth it. Oh, I don't need this. Okay. So in this market here, I've marked out 9:30. What I do is, this is the Asian market. I take my ray and I mark my lowest point here, and I mark my highest point here. And I go, okay, Asia kind of was right here and stopped here. Now I'm going to mark my London. This is my London high, and my lowest London point is here. So right then and there, I need interpretation. So Asia market was up here, and it got low. And now London market opens up, and I don't see, because again, price is drawn, it's a magnet, right? It's constantly being pulled to itself. So I'm looking to see if London price ever intersected with Asia price high or Asia price low. What will make this easier, I realize, is if I color code. So I usually put my Asia prices marked as red. My London prices are marked as blue. Blue. So I'm looking to see, did London ever intersect with Asia? And look, it did. On this candle opened up here, went down, up, down, up, down. It went past this Asia and created a high price, the highest price, came back down, danced around, and closed down here. So London took out Asia high and reversed, right? Because it took it out and it did not stay above, it came down. Okay. And then we enter into the pre-market somewhere over here, and then the market opens up at 9:30. So now market opens up, and I'm looking to see what price wants to do. Here is where I look for something called like liquidity, where I drop down from my high time frame, now that the price has opened, into 5 minutes. Oh gosh, I hope I didn't lose myself. Okay. Perfect. Again, this is Asia market, which might be a little bit higher here. Asia market, London market, New York market. So I look to see where price has taken out a previous high, where price was magnetized to its previous self, and where it's taken out the price. So Asia high was here, and London went above and took that out and came back down. When I see market move in that way, where price takes out, comes to what was a previous key level and goes above it and rejects, this is considered liquidity. Okay, there are a lot of definitions for it, but that's the simplest way. Where I see price come and take out a previous high point and reverses back down. Here I see price took this low point and reversed back up. That's the concept. So here at whatever time this was 8:25. Price went above the Asian market and came down low. When it does that, I'm preparing myself to look for an entry because price is telling me it wants to go down and it wants to be sort of like take out the prices or come back to where it had been before, because price is a magnet. It wants to be drawn back to these previous prices. So when it takes it out and I'm on this 5-minute, I drop down so I can have a more precise entry, because 30-minute is a lot of information. Hourly is a lot of information. The 5-minute gives me a more sniper view or kind of a closer view on my prices. Remembering again that each candle is now 5 minutes long. So now I'm looking for what's called a fair value gap, which means I'm looking for an imbalance. I'm looking for where the price completely created such a gap that it needs to come back to balance it out. Again, I know I'm repeating myself, but I'm saying that every time that price moves in a certain direction, whether it's up or down, in this case it's up, it leaves its fingerprints behind, and so it has to come back on the other side to sort of fill it before it can move on to the next direction or move back up in its overall trend. So the fair value gap always shows that the price is trying to move in its regular trend, but it's going to come back and recognize that gap and fill it, because it doesn't like to leave things open before it continues. So now I'm looking for a fair value gap, and I'm going to show you what a fair value gap looks like. Price is taking out the Asia high and has reversed below this Asian high, so now I'm looking for a fair value gap. And I know I took this trade, but I don't remember this trade, so that's fine. Okay, here's a fair value gap. Is this a fair value gap? No, this is a fair value gap. So a gap between the first candle and the third. This gap between the tip of this, I'm going to zoom in. Tip of this wick, the bottom of this most wick, where the lowest price of this candle is, to the highest point, highest price of this third candle. This gap in between, this gap, this, oh Lord, this gap in between, that is your fair value gap. And so when we see that, we realize that, look, this is way too much of a gap, this space. Now I know there's a candle here, so you're like, why is this a gap if there's a candle here? It's still considered a gap. I don't know the details, but I know it's a gap. And so because price always seeks out where it's previously been, price is pulled like a magnet. Price is a creature of habit. It must go back to correct it. So what does it do here with this candle? Because with this candle, it keeps It makes its own, but it never acknowledges this gap. But this candle goes back in and touches into this gap. Just a touch. It just recognizes like, hey, this space here, we need something to kind of pop into it. Now, it doesn't have to go all the way in. It doesn't have to go tick out. It can just barely tap just to recognize or acknowledge it and close back out. Once it does that, this is what lets me know I can take a trade. So I use a few other things to figure this out, but the biggest things that I use is liquidity, which is price taking out a high key level, and fair value gap, which is price rebalancing itself. Once it does that, I hit my my short position. When this candle has done that and closed back out, which means it closes somewhere here, I'll put my little position tool, which is not my favorite, here. You can either put it above the gap, which is fine, but my experience knows that one, you need to put it slightly above the gap because S&P and NASDAQ are super volatile instruments. They move crazy because it's just so much volume. They are a multitude of other smaller, really big companies underneath, amongst others. So to me, I just think about it like that and go, you know what, let me give y'all the room y'all need, and I'm gonna put y'all above what is called a swing high. The last kind of hill that was before all of this movement took place, that's what I'm gonna put this above. And then I'm going to aim for the last key level that I have marked here where I know price wants to go to, and that would be this. What I also usually do is I'll mark key levels down here in this area where I think price wants to come back and touch. So price may want to come back here. Price may want to come back here. Price may want to come back. No, it's too close here. These are all probably places where I think price might want to re-enter into. You don't have to make your stop loss this high. This is pretty exaggerated. For me, I know I would have just done, I hate this magnet tool sometimes. I know for me, I would have just done, let's see, where it entered and closed, yeah. For me, I would have just done barely above here. That would have been fine. And I would have aimed for this Asia, what do you call it? High time frame, or the lowest price that Asia was at, because this is a key level that I know price wants to get back to. And what do we see on here? Price eventually gets back to it and actually exceeds and hits a couple other lower key levels. And once it does that, here I'd wait for it to hit this level. Once it hits here, I would take, and if it closed, if the candle actually went beyond this line and closed, I would take partial profits, which means if I entered in with, like Top Step says, you can go in with max position of 5 contracts. So if I entered in with 5 contracts, when it hit this line and closed below it, this could be indicating that the price wants to keep going. So I might, but to protect my capital, I might close out of 3 contracts and leave 2 as quote unquote runners and let those keep going, and let's see how much lower they can go. And this is how I take my trade. Super simple. That might sound complicated, but it's really simple. Honestly, it is. Let's look at another one. It's really, really simple. Because I've seen complicated. Trust. So this is Asian market. This is my lowest point here for Asian market. I'm going to make it red. Where's my highest price? This is my highest price. I make that red. Switch over to London. What's my lowest London price. This is my lowest London price. Make that blue. What is my highest London price? This is my highest London price. That's also blue. Now I interpret this, because now that I've marked London, I know London comes before New York. I want to see where my price is moving. So London right now, Asian market sort of moves on its own. But I notice in London takes out Asian market and starts to reverse down in the new session, in New York session. So like I said, price is a magnet down for itself. So price was taken out in the Asian market. It hit this high level and created its own high. And now in the New York market, which is where we trade, we're looking for price to continue going down because it has reversed. Every time it goes up and takes at a previous level, I'm expecting it to go down. Anytime it goes down to take a previous level, I'm expecting to go up. Now, people say price is going to do whatever it wants. Sure, whatever that means, right? We know that price is like a magnet. We know that it always goes back to where it's been. But we're also not the controllers of price. So sometimes that doesn't always happen. Sometimes even though you expect it to reverse and come down, it will just reverse and consolidate. Or my favorite, it'll not reverse. It'll take out a level and consolidate, meaning it does nothing. Or it'll take out a level and it'll just kind of barely hug this key level and just go up, making no sense, right? But that's totally fine. You only look to enter where you see your entry and what makes sense. And what makes sense to me is that the price takes out previous high, key level, makes a new high, which is great. And now I'm seeing in the new session, I forgot to mark my key, pre. All right. In the pre-market, I see that price is like coming down towards this key level, and by the time it hits 925, it's crossed over this key level again, meaning it's touched it from before, and now we're heading back downwards. So you know what, now that we've reversed, I'm gonna look for my fair value gap. I'm gonna start looking. So I'm looking, let me see, this is kind of a tight one. Okay, yeah, this was the one. So I'm looking for a gap between these two right here. It's a little tight, but it exists. This wick, let's zoom in. And zoom in. The end of this wick, meaning the lowest point, along with the third candle over here, the highest point, there is a gap. This gap here. In that gap, I'm expecting price to come back up and fill it somehow. Now, the full body of the candle, I don't want it to go past this gap and close, because if it goes past this gap and stays here or closes here, then to me, that means that this gap is not real, does not exist. It's not really a true imbalance, whatever. Let's scrap the whole idea and reevaluate our whole lives, basically. But in this sense, I wait for price to go back in. So between these three candles, there's a gap. So now I look to the next candle. Okay, the next candle is down here. Okay, next candle in here. Have either of these entered into this space? No, they have not. Have they come close? Sure, but not really. Then we go to the next candle. Okay, you know what? It's gone in. The wick even went over, but that's okay because the whole body did not go over. I'm okay with that. You know what? I'm taking that. So then I do a short position for the next candle. I can even see, I can put it here at the key level. I can put it just above, barely, because I don't know. I can do a key level just to be safe because that's nice. Most people like to do it over a swing high, like over here. For me, a key level is okay, or just maybe like 30 pips. 30 pips above this level here is fine. And then we draw down to this key level, meaning I expect price to hit, after dilly-dallying in this gap and filling it, I expect price to hit this key level and be done. And so once it hits this key level, you take your profits and you go home. Another way to look at it is when it hits this key level, you kind of notice that the key level is drawn here, but the price is beneath it. It's hard to see with the labeling. The price is kind of beneath it. It closes beneath the pink, which a lot of times indicates price wants to keep going down. So you could go back to your top step and say, okay, I'm going to take out 3 positions or 3 contracts or what have you, but I'm going to let 2 run because I think that price wants to keep going. And you could aim for where, because it's not only important for you to get into a trade, it's important for you to know how to get out of a trade. So you could aim for, because after you've passed this, you could aim for this here. You can aim for any of these down here. Is it not? Okay. You can aim for, okay. You can aim for these prices down here. You could aim for this down here. You could aim for this down here, these down here, these down here. You always look to your left to look and see where price has been as your targets for when you can get out of a trade. So there's that example there. And then we go into, let's see, that was that example there. Okay, and now we go into this trade. So on this one we have Asian session high, Asian session low, London session somewhere over here high. Am I not pressing this correctly? Make it blue. And London session low. Something's not right. Okay, now we interpret this. Now let me take some of these things off because it's going to be confusing from the previous. I don't know where this is from. Okay. Nurses are having way too much fun. Okay. So now when I look at this, and let me draw my where's 8:30? Perfect. Okay. So this is London market, this is Asian market. So London market, what does it do? It takes out Asian market, comes back down. Let's make sure you can see it. This is London market. It comes up, it comes down, it comes back up again. Takes out the Asian market, touches it a few times here, and goes up and just continues to stay up, which is fine. So that means it has manipulated Asian market. So let's see, if it has gone up, the question is, are we going to go down? That's what we want to know, right? Because that's what we see. Well, that's not what happens in the London market. So now we go into pre-market, pre-New York market, and we see price does what? Price kind of teeters around, creates this newer high for London, which is fine, and it bounces around. So it comes above London, it drops back down, it goes above, and now we're in the New York session. So now you're like, okay, I don't necessarily have a period of where it reversed back down for me. So I may want to look for other confluences to give me an idea of what market wants to do. We know that the overall sentiment of the market is bullish, which is what we saw when we went through these. But unfortunately, I've not had any true takeout price, right? Because Asia high is up here. London came, took it out, dropped back down, went up, and has stayed up. It never properly reversed back down. Neither did it ever take out Asian low and reverse back up to tell me it's going upward. So really, there's nothing really for you to do at this point. But if you're someone who's like, well, let me look to see what other techniques or strategies I could use, this is a pretty good example right here of relatively equal highs. So when a price hits, when a price hits a level multiple times and makes almost the same height. They're almost the same height. At least these two are pretty close. When price hits 1, 2, 3 times in a certain area and it's pretty much the same height, I look at that as a draw on liquidity. I do. I look at it and go, okay, this is important. This is a high area where, you know what, sellers, meaning the market that wants to go down and push price down, the bearish, the sellers, the puts, those are strong. They are not letting the bulls, the buyers, the calls, they're not letting them pass this point. They must be strong. So I'm going to look for evidence that's going to allow me to say, hey, I'm thinking price might want to go down. So when I see this, I kind of am cautious about it because you just don't always know. It won't always happen that well, but I still look for a fair value gap. And I think I have one here. I might not have drawn that well. Let's see. Is that right? Okay, I'll draw it like that so that I can see it. Okay. So like I said, you kind of want a candle to touch or go in to this space. When that happens, which this candle sort of does, you can go and take a sell down. So here we go. I would put it above this fair value gap. But because I don't trust this whole setup as well, because this didn't happen in the beginning, this is more of equal highs. At this point, time is like 10:50, which I trade only within a certain amount of time during a certain period. So right now I would be out of my regular window. I'd be cautious. I'd probably only take my trade here and be about my merry way, because at this point it's 12 o'clock. And so, but I can tell that market was pretty nice here, because even at 12 o'clock, the candles are good. Typically the candles will sort of slow down. So there must have been news here or something that took place that allowed for this movement. Let's say you weren't comfortable because this candle kind of barely ticked there. So we would look for another, because I know I probably would. I'd be cautious of that candle. I would look for another gap. So I see a gap here. But on this gap that was formed at 12:05 in the afternoon, you don't really see a candle enter it until 13:25. But despite it entering, it never closes above this gap. It only ticks up. And so when I get a candle that closes right back out, I would enter into a seller's position here. Put my stops just ever so. I would probably aim for here, which would only be a 1, 2, 3, 4, which is a 20-minute trade. But if I saw this candle close beneath here, I might be inclined to even aim for what? This previous low. I could aim for this as well, but I'm not going to skip and not acknowledge that there is a significant low here that price would probably want to be gravitated towards. Now, it doesn't get there all the way. It does not. And time is important too. These trades that take place, sometimes the key levels are how do you say, what words do you use? Better acknowledged during certain time periods. At 2, 3 p.m., typically your candles don't move as well. So I'd be cautious about taking a trade all the way down here and expecting it. In fact, if you were to wait for this candle to hit this tip, you would have lost profits, because obviously candle reversed back, or price reversed back. So for me, knowing myself, I would have probably stopped here. And if I really wanted to, I would have scalped. I would have kind of stayed into a trade and I scalped into somewhere down here And especially seeing this candle here, and seeing this up, down, up, down here a little bit, I would have been concerned about a possible reversal to the upside, and I probably would have gotten out. So this is kind of a quick little cursory look on how I enter into my trades. I want to say I can take another one here. Let's see. Yeah, let's do another one here. So this is 1800. This is 3. Okay, perfect. 3 a.m. Let's mark Asia low. Let's mark Asia high. Let's take this out. Let's take this out. And let's mark London high, which is here, I guess. It's hard to see sometimes when you have the lines of like demarcation, but you make do. Okay, and then pre-market is 8:30. Cool. Okay. Oh, this is a trade that I lost today because I was not paying attention at all. Okay. So in this in this London market, I see that London has taken this price out, and I see that it has reversed all in this session. So then I'm waiting for the pre-market session to take place. And now I see that the pre-market session has gone up and kind of come down for this Asian market. In my mind, I knew that this is a key level, but I didn't pay attention to the fact that there was a fair value gap here. So there's a fair value gap here in this key level where price dips down, closes above. So you could have taken longs here and your aim, you could have aimed for right up here, this price, or you'd have aimed for here. I realistically would have aimed here, because when I see prices jumbled like this consolidation, I start to think about how this is a high, relatively equal highs, and price is going to come down because that's what it wants to do. But I missed that key level there. I also missed that London came back down below Asia highs and kind of gave this impression that it's going to keep going down, but ends up reversing with this key level. I wasn't paying attention in this trade and missed that. But liquidity or price magnet or whatever you want to call it, plus fair value gaps, are the ways that I enter into trades. And it's super simple. I'm more than happy to delve more in depth and give more concrete information about every single step that I do, because not every single confluence that I use was expressed here. In these trades, I didn't need to. These were pretty simple. But I wanted to give a simple show of what I do when I enter into trades. I will start recording, or I will start live trading and streaming it so that people who are interested can actually get into the trade with me and at least see the thought process that I have, because I will talk out loud to you or to myself, explaining what I'm doing, why I'm doing it, what I'm thinking, why I'm choosing this over that, things like that. Because it's a lot easier to watch somebody do it and you participate in it than for me to just draw out images on a closed market when you don't see price moving. But I hope this little quick snippet was helpful as far as understanding the trade. The next one I'll do here is understanding how to get into Top Step and how to place a trade and get out of a trade. And that'll probably be it for that.